Hey there, and welcome to Real Investment News. I'm Mike O'Neill. So over the past several months, I've noticed something interesting. The markets are easily swayed by headlines, but slow to react to the actual news underneath them. For example, on Tuesday morning, futures were soaring after headlines proclaimed that Chinese President Xi Jinping had plans to significantly lower tariffs on imported cars, apparently in reaction to President Trump complaining about the tariffs on Twitter just the day before. But when you read more on the issue, you realize that the Chinese government had already promised to gradually reduce tariffs on imported vehicles back in November. Now, back then, no timetable was set, but there really wasn't much new to the news. But for good measure, President Trump tweeted his thanks and investors were happy. Markets actually closed higher on that day. Doug Kass of Real Money Pro and Real Investment Advice warns about this in his post, The Algos Read Only Headlines. Algos is actually short for algorithms. In it, he notes how comments from China's president may have actually been recycled and really aren't much of a concession at all, but investors didn't seem to care. So what are we to do with a headline like this? U.S. inflation rate highest in a year. And you take a closer look, consumer prices up 2.4% year over year in March. Well, with investors so fearful of the Feds becoming aggressive with raising interest rates to curb inflation, this can be a bit alarming. And when you compare numbers like the CPI year over year, it really doesn't tell the whole story though. For example, while there was an increase, most of the climb actually happened in the latter half of 2017 as the nation was recovering from 3 hurricanes and devastating wildfires. And when you look underneath the headline, they do note that inflation actually ticked lower in March, down 0.1%. It's essentially been flat over the past 3 months. And when you look at the long term, yeah, prices are always going to go up, but it's natural. But how fast? And that is when we do need to look at the percent of change, but year to year, over the long term. As in this case, we are going all the way back to 1980. Now, these changes are still pretty volatile, so we're going to smooth it out here with a 3-year average. That is this red line. And here's where we see something very interesting. The percentage of change has actually been declining for decades, very slowly. And when you throw in a trend line, you can see that there is a little bit of an uptick right here, but that's only because of the negative dip that we had near the end of the last recession. So that is why Doug Kass is so concerned about the algorithms that chase the headlines. And he warns investors, read through and analyze the headlines more than the algos that control the markets over the near term. That is good advice for sure. That's it for now. Thank you so very much for watching. As always, please remember to follow us on Facebook, Twitter, YouTube. Check out our past reports on realinvestmentnews.com. I'm Mike O'Neill, and we'll see you again in a couple of hours.